Well, I don't know if I should say thank you, Fred, for this kind words. I'm not sure this idea of title of 10 Commandments for this paper, which, by the way, is a very interesting paper, was the right choice, but that was what we did. Well, ladies and gentlemen, there's so many friends among you and so important person that I have first to apologize not to be able to thank all of you individually. So let's just accept to be thanked for being here all together. It's obviously my pleasure to be in the Peterson Institute today to talk about the mandate of the IMF and clarifying the mandate for the future. And if I may, following somewhat what Fred just asked me, I'll start with saying a few words about the recent G20, because it's part of the G20 was in one way very much about this question of how things are going on in the future and what role the IMF can play. So it's very close, finally, to the topic you asked me to talk about. Broadly, three messages, in my view, came out from the G20. The first one, which is probably the most important one, is that collaboration is still alive. And I was worried, with many others, before the meeting in Toronto, that the spirit of coordination, the willingness to work together, which was so strong and so effective, starting here with the first G20 in November 2008, then in London, then in Pittsburgh, will just vanish because of the recovery and the fact that it's clearly understandable that governments are more likely to work together when they're scared, and they were. But when the recovery comes, then everybody has his own domestic political problem and may be less interested to work together. So there were really a threat to the consensus and the possibility to go on looking forward with a strong consensus as the one we had during the last 1.5 years. Finally, I think that certainly part of this is true, but taken all round, the spirit of coordination is still alive, and that's really important, and that was really clear in the leaders' meeting. In the run-up to the G20 meeting in Toronto, there has been a lot of discussion and press about a supposed conflict between some, let's say the US, arguing that the stress should be put on growth, and others, let's say the Europeans, saying that fiscal consolidation was really the thing. And this choreography took a lot of time, and finally, in my view, and I expressed this at the leaders' meeting, but I think finally it was the idea of most of them, maybe all of them at the end, is that, well, there are some diversity, that's clear. The situation are much more diverse than they were at the outset of the crisis, because at this time everybody was facing, not exactly at the same time, but almost at the same time, the same kind of problem. And the answer was rather obvious, so everybody could easily say the same thing. But in the wake of the crisis, even if the crisis is not over, the situation is different. And because of different starting point, including in a debt ratio, the situation of the different countries today are different, and so they need to implement different kind of policies, even if the goal is the same. And coordination doesn't mean uniformity. That coordination in economic policy doesn't mean that everybody is going to do exactly the same thing at the same moment. And this idea that there could be some diversity in the policy being implemented in the coming months, which doesn't mean that it's that they abandon the will to work together and to coordinate the actions. This idea, I think, was one of the important outcome of the meeting, together with the approval of the report which was asked in Pittsburgh to the IMF, presented in the first version to the finance minister in Busan, Korea 2 weeks ago, and the final version to the leaders this weekend. I'm talking about the so-called mutual assessment program, which basically is the idea of for the IMF to provide some technical assistance to the G20. It's a process which is G20 driven, but nevertheless in which we have a large part, and trying to put together the forecast about 3-4 years that the different countries may have, and just to see if it fits. And well, my first idea was that it won't fit. and that everybody will say we're going to have high growth relying on export, and that adding up the export, obviously something will appear impossible. To my surprise, it was not the case. The constraints has clearly been internalized by most countries, and so what they say adds up. Most countries, almost all countries, explaining they're going to grow mostly based on domestic consumption or investment and not relying too much on export. And so when you put all this together, broadly, it works. The problem is that it works, but it may not be true. And the policy implemented by the different countries may not lead to what they assume it will lead. So our role was a bit different from the one I expected before. The first role I expected was just to show inconsistency. There were not so many inconsistency. The question is, okay, you say you're going to do that, now you need to deliver. And in our view, the policy you have already implemented are not enough to deliver what you say it's you will deliver. So the baseline of this exercise is not too bad, but not good enough. And we propose some simulation and some enhancement in the policies, different from one country to another one, leading to something which may lift global growth by 2.5% over the 5 coming years, which means more than 30 million new jobs, which means 35 million or so people out of poverty. And this idea that working together is a win-win exercise, that really the global economy is a cooperative game where if everybody does what it has to do in their homework, then we can have better result than if everybody is just looking inwards and doing its own stuff. This idea, I think, had some steam during the meeting, and we are going to provide on a country-by-country basis this kind of a very precise advice in terms of economic policy for the meeting in Seoul in November. I hope that at this time the leaders will endorse it, and then even more I hope that they will implement it. So it means that some significant enhancements of the global growth could be achieved. All this to say that this idea that the G20 wants to go on beyond the crisis, wants to be the platform or the body where economic coordination could take place is really still alive, and that's, I think, the first result. I will be very short on the other one. On the financial sector, I think that progress have been made. Still, a lot of things has to be done for the Seoul meeting, but even if on taxation, for instance, it's a bit divisive because some countries say we're going to do it, some countries say we don't. I was a bit surprised by some press release saying the idea of a taxation of the financial sector is dead. Because, when the US wants to do something, the first financial place in the world, and the UK, the second financial place in the world, say we're doing too. So the Japanese don't say so. But then the Eurozone, the fourth place, say also we're going to do so. It's not because some other countries say we don't like it that it means that the idea is dead. So I really believe that although in this field some progress have been made, even if on the regulation side, and especially the definition, quantity and quality of capital that is needed for the banking sector, there's still some discussion, but we may have good hope that this will be solved for Seoul. At the same time, the role of the IMF has been recognized in this, both on the FSAP, our financial sector assessment program, on the a new role that has been asked by the G20 to the IMF to play, which is to be part of the definition of the rules for the supervision process in the banking sector. So on all this, some progress have been made. Let's be cautious and wait for November to be sure that the FSB will deliver. And of course, a third topic, which is a usual topic for G20, but nevertheless a very important one, has to do with completing important reforms in terms of governance and quota. And, I think that we will be able to deliver for the end of this year, which means de facto for the Seoul meeting in November. It's not easy because governance question always very tricky. Quota is very sensitive, but I think we can do this on top of the first reform we did in 2008, which was only a small reform, but if we add up the different reform at the end, it will make a real change. So, drawing on the lesson of this G20, the question is, what will the IMF do if the crisis really is over in the near future? So even if the world has recognized our role, as Fred nicely said, during the crisis, is there a role for the institution in quiet times? What can we do? Are we really only firefighters, which are useful when you have a fire and which are forgotten when you don't have a fire anymore? Or are we able not only to be useful in the crisis time, but also to prevent crisis in quiet times and to make it in a way that will be recognized, acknowledged by the international community? I think there's no need to come back too much on our role during the crisis. It's well known by everybody here. I think we played a nice role in being a vehicle for policy coordination. Certainly we took part at the launch of the stimulus. Some, nicely enough, say that the first institution asking for the stimulus was the IMF, which is probably true. And certainly it was part of the policies put in place that avoid something as big as the Great Depression. Just remember, 2 years ago, 1.5 years ago, many were afraid by the possibility of having something as severe as the Great Depression. And we didn't avoid any kind of crisis, not at all, but at least we avoided something that big. So finally, on this part, I think that everybody knows there's no need to elaborate more. On the financing side, it's more technical, but you know that our resources have been tripled. You know that we implement a new kind of tool, including the flexible credit line, which was a real change in the way the fund is working and has been implemented by 3 countries, Mexico, Colombia, and Poland. You know that we also put in place zero interest rate loans for low-income countries, the subsidy being financed by the sale of gold that has been lowered by our membership, including the U.S. Congress, that really was very effective on this thing. And we also try to reconsider conditionality. Not saying that no conditionality is the right way to go. I mean, I really believe that we are building a new IMF altogether, but still, the new IMF is still the IMF. And conditionality is something which is very important in the way we deal with countries. But this conditionality can certainly be more focused than it was in the past, considering really the problem at stake and not all the problem of the countries that we are dealing with, because then it becomes impossible just to solve the problem. Also, more concern than in the past has been put on what I call social conditionality, which is to take care to the most vulnerable in the countries, because ownership of the program is something which is important for it to be effective, and part of this ownership comes from the way you may deal with the most vulnerable in the country. All those are changes that you know. Another big thing during the crisis was, of course, the allocation, the issuance of $283 billion in SDRs, which have been very, very useful for many countries. And I just want to pay tribute to Ted Truman for this, because the IMF did it, but Ted wanted it. And and certainly without Ted, all this wouldn't have happened. So I'm not going to repeat this too many times, because I want to keep some credit for it. But nevertheless, I know where it comes from. So far, so good. In FCL countries, spread have narrowed very rapidly. In program countries, during the crisis, the output losses were smaller relative to past crises, and more generally, large movement in exchange rates and interest rates were avoided. Interestingly enough, there's a new thing in this crisis, which is the way the IMF is likely to work with regional entities. And what I have in mind, of course, is the European Union. The first step was working with the European Union, and especially the European Commission, for countries outside the Eurozone, Hungary, Latvia, Romania, where we find a way to manage, not that easily, but it was not too difficult, and with the leadership of the IMF and the support of the Commission. Then came the second phase with the Greek problem, which was totally different. You remember how much the Eurozone country and Eurozone institution were reluctant to have the IMF stepping in, and I can understand if I just get rid for a minute of my hat of MD of the IMF and look myself as a European citizen, I can understand that they wanted to deal with the problem alone. The problem is that to want to deal with the problem alone is not enough. You must be able to do so. And after a couple of months, it was clear that the expertise of the IMF, not only the financing of the IMF, but also the expertise in building programs, was needed. I'm not trying to say that it's rocket science, but you need to have some experience on it. And I don't see how a regional grouping could have this kind of experience, because hopefully they're not going to have crises all the time, so they can have teams trained to do this kind of thing. And that's why we have a global institution in charge of this kind of problem. So it took several months, probably if we have dealt with this problem in January, which was possible, to have been much costless for everybody. But that's life. At the end, the last 2 weeks, we stepped in and the program has been completed. And that has also established a new kind of relationship between the EU and the IMF that may be useful for working with other kind of organization in the world, different certainly from the EU, not as sophisticated as the EU or the Eurozone, but nevertheless important. Of course, I have in mind the Chiang Mai initiative. And I think that the experience we had in showing that it's possible to have not only two level, the countries and the multilateral institution, but something in between, which may be more and more frequent in different parts of the world, that we may manage this. I think it was also useful looking forward. So what does it mean for the future? Our role, one of our main role, is surveillance. And the problem is that it's a dual role, because we are, on one hand, ruthless truth teller, and on the other hand, we have to be trusted policy advisor. And the two are not going so easily together. Before the crisis, this crisis, surveillance lagged behind the global economy and the financial development. And we did things pretty much as we always did, which was just normal, because a crisis and a shock as big as this crisis was needed to change the behavior. So we were probably too much focusing on individual countries, paying insufficient attention to systemic issues, and even the format of our reports has barely changed over decades. Now, I think we need, going forward, a new toolkit for a new era. And I think we have a good start. We revamped, even if it's not yet, we're not there yet. We revamped our early warning system. We try to have a more systemic, look more at systemic implication. And even if it's difficult, even again, if we're far from having reached the satisfactory level, I think really that things are changing on this side. Looking forward, macro-financial stability should be front and center of the IMF surveillance. We do not aspire to be a global regulator, as it has been sometime written in someone. That's not our role. We're not a regulator. But we need better understanding of the complicated nexus of exposures, cross-exposures of big systemic financial institutions. And to do this, we need to improve our access to data, with the problem of the data being confidential. So we need to work more with national supervisor, with the FSB, to be able just to have the information which is needed to be able to assess what's going to happen if you have a default somewhere, with consequences on parent banks at the other end of the picture, what kind of consequences and feedback effect you may have. Maybe you remember the first attempt we did in this direction was 1.5 years ago, a report on Central Europe, where we tried to see what could happen if this report has leaked in the press. I don't know exactly how, but that's part of the mystery. And so it's not a secret to talk about it, where we were trying to see what kind of consequences a default in some Central European countries through the channel of trade channel is important, but financial channel is much more important. To the channel of banks will have an influence on Germany, France, UK, and then a feedback effect again in those countries with finally feedback loops that may increase a lot the size of the problem. So this kind of analysis, which is not traditional early warning with red lights or green lights, but it's more simulation, scenario, trying to see what may happen and be prepared to face this kind of situation, is something in which to which we devote a lot of resources these days. Of course, we need also to beef up multilateral surveillance. That's why we are working on preparing spillover reports. The basic idea is that in systemic countries, domestic policy is not only domestic policy, it has also a lot of consequences on the rest of the world. Biggest example, of course, being the US, but not only the US. And monetary policy in the US, in the traditional Article 4, where we look at, and the bilateral point of view, how good it is or how bad it is, or what would be our advice on the monetary policy for the US itself, has to be supplemented by something which is what's the effect of this policy on the rest of the world. I'm talking about the US because we're here in Washington, but there are many other cases that we have to take into account. So we are starting with 5 systemic economies, US certainly, China, the Eurozone, Japan, and UK. And in the next 18 months, we're going to produce this kind of a spillover report as a it's a learning by doing process, so we'll see how they're received and certainly improve them over time, but to try to take into account what are the consequences on the global economy, what is done in those systemic countries. Of course, this doesn't mean that in any way we could forget our bilateral surveillance. That's the bread and butter after IMF. But even the bilateral surveillance has to be improved. Years ago, when IMF team went to, say, Brazil, they didn't have at that time a lot of good economists, and for reasons which are obvious, and so we had some added value. Now, Brazil has the Brazilian economists in the government knows the Brazilian economy better than we do. So, what's the added value? Is there no added value? No, there is one. I think a very important one, but it's not the same as before. It's still the same as before for low-income countries not having these human resources, but not for more and more emerging economy. What's the added value? The added value is that we know, and they don't know, a lot about what's going on around them, in the countries next to them. We know and they don't know that what they're trying to do in the tax system or whatever it is has already been tried 5 years ago in Scandinavia or in Australia, and that's the advantages and the drawback, that's the problem. So all that kind of thing we can, in bilateral relationship, provide to them, and that's why we are, besides the spillover report I was just mentioning, we're also going to develop multi-country report, which takes into account the relationship with the neighborhood. Now, let me say a few words about, after surveillance, let me say a few words about the lending. There are still gaps in the global financial safety net. As I said, and I'm very proud of this, I think the FCL was a successful step in the right direction, probably because we were able to listen to our membership asking for more flexibility. But to serve its intended purpose, the FCL must remain a platinum brand. And certainly we can improve the way it works, and we're working on that, but it still will remain something which is reserved for a rather small number of countries. So what about countries facing market jitters that do not qualify for the FCL because they don't have the track record that make it possible to benefit from the FCL with no ex-post conditionality at all, as it was the case for Mexico, Colombia, or Poland, but still having rather good policy in place, just being hit by a shock coming from outside. So we will propose, and we're also working on that, what we call a precautionary credit line, which is the small sister of the FCL. The condition for qualification will be a bit less strict than for the FCL, but in return there will be some ex post conditionality, and I do believe this is a rather large set of countries likely to use it as a precautionary tool. Then it also makes sense to try to develop a framework for dealing with a systemic crisis, kind of coordinated mechanism to proactively channel liquidity to countries under pressure. So the problem for this is that, of course, no country wants to move first, because the very fact to ask for something show that you have a problem, and then it may create markets, increase market pressure. So this question of chicken and egg is a very difficult question to solve. Part of the solution could be in the fact that in a difficult situation, the IMF could provide a multi-country system. So not one country will be seen as a possible target for any kind of speculation or so. At least the stigma will be shared. And so if a set of countries at the same time benefit from this kind of a systemic arrangement, it may be a solution. We're working with the Korean presidency of the next G20 meeting on this. They're very keen to try to have something done for this time. We will see if it's possible. Another point is what I mentioned before, a lesson from dealing with the European, is that we should also partner with regional financing arrangements. The way we did it with Europe was very innovative. It cannot be exactly mimicked in other parts of the world, but certainly it's a useful precedent on how we may work with region in the future. And then the last point on lending is a long-term question which relates to the composition of the supply of reserves. Certainly the SDR's issuance at the peak of the crisis has provided relief to many, and it makes sense to ask whether an enhanced role of the SDR would be useful in peacetime as well. So it's a big discussion that is not going to be solved overnight, but the role, the way we should organize the international monetary system, which kind of currency may play this role of a reserve currency, what role the SDR could have or shouldn't have in the system, how to avoid that the rush to reserve accumulation, which is boldly a large part of the imbalances that we are seeing coming back this time. It was a big problem before the crisis, has been a little forgotten during the crisis because we had other stuff on our plate, but now, of course, comes back, not exactly in the same design or the same landscape that it was before the crisis, but close to it. And so this question, looking forward, is certainly something that the Fed has to address. Now, eventually, 2 words about governance. Well, the governance agenda is a very ambitious agenda, and for it to work, there's a precondition, which is legitimacy. The legitimacy of the institution depends on a governance structure that reflects the global reality and the evolution in the global reality. In 1944 in Bretton Woods, the institution started with 45 members. Today we have 187. I used to say 186, but since the end of last week, we have Tuvalu Island having joined the fund. So the 12,000 citizens of this island and this nation are increasing a lot, our universality. So now we 187 countries. So it's different. Back then, a small team of countries powered the global economy. Today, there are many engines across many countries. So obviously, if we want the institution to be effective, we need to have an enhanced legitimacy. On the other hand, it doesn't mean that newcomers, emerging countries, may say, now we're here, just let us do what we want. They have certainly an increasing role to play, which doesn't mean that so far the role is a dominant role, and still the traditional shareholders, the US, Japan, and the European countries, have a large part of the voting power, whatever the change that we're going to implement. But I do believe that reforming IMF governance goes hand in hand with modernizing our mandate. You know what we did in 2008, which was just the first step, not that big, but a step. We're committed to shift 5% of the voting power for year end. It's not totally clear from who to whom. So that gives a part of the room for negotiation, but 5%. So, as I said, it's supposed to be completed for January 2011, but it means de facto that has to be done for November for the Seoul meeting. But quotas are very important, but they're not the end of the game. A lot of things has to be done in other part of the governance. A greater ministerial engagement in what the IMF is doing, the change in the management selection process. So there's a lot of things that we can do. Also, improving diversity in staff, because the way we take into account different culture and different part of the world is also reflected by the composition of staff, and have a long way to go to have a more diverse staff. So there are many questions that has to be addressed, not only, even if it's the most well-known question, not only the quota question. So I'm committed to these reforms, and I believe that our members are too. And really, I think that it's not something which is just put on top of the rest to make things looking nice. It's really strongly intricated with the rest of the mandate, because there's no way and no use for the Western economies to keep a bigger power on an institution which itself would have less power. So the question is to keep a right power in an institution which will play its role in the global economy, and that requires that everybody feels at home, including, of course, the emerging countries. Now, to conclude, I would like to call upon our members to support these reforms, because all these reforms are needed. Maybe some others that could be added. If we want an institution like the IMF to play its role and to be able to serve its membership in case of a new crisis, and nobody could be naive enough to believe that, I don't know when, in 2 years, in 5 years, in 10 years, maybe in 20 years, but somewhere, other crises will occur, and we need to be more ready than we were this time. First, to try to avoid crisis, and when crisis arrives, to address this crisis. You know, we were given a mandate in 1944 for global economic and financial stability. But what is behind that? Behind that at this time were the idea of the founders that one of the reasons for the World War II was economic and financial instability. Probably not the only reason for this, but one of the big reasons. And so that trying to build an institution that will try to provide this global public good, which is financial stability and economic stability, will help to avoid economic crisis, and from economic crisis, social unrest, and from social unrest, threat to democracy, and sometimes ending with war. So I see the role of the IMF really of course, working its own field, which is the economic and financial field, but having in mind that the overarching goal is to help providing some support to any kind of peace process. Well, peace process is certainly a bad word because it refers to something different. Let's say to providing some support to any attempt to maintain smooth relation between countries, avoiding that some crisis in some countries, and it has been shown many times in the past, not only the reference to World War II, but we have a lot of more recent references showing that the economic distress may lead to local conflict, and from local conflict to something that can be worse. So our role is something really which starts with economic and financial stability, but which ends with the goal of all multilateral institutions. That's why improving our mandate, not enlarging our mandate, as some have said. We don't ask for a bigger mandate, but just clarifying what we're doing, adapting this mandate to the real world of today is something which is absolutely necessary, and I hope that we will be able to do this in the coming year. For this, we need a lot of support from the leaders, from the parliamentarians, from academics, from the different think tanks thinking about all this. First, to help us to do the right thing, and second, to make it possible for us to implement it. So that's why I was so happy to have this opportunity to meet with you today, not only to listen to you and trying to answer some question, if any, but also to urge you to help us to go forward, because in no way we can be again in a situation where an institution, which in my view is as important, so important, could be seen as useless just because we don't see any crisis at the horizon. Multilateralism goes with globalization, and I can't understand how we could think of globalization going on without having stronger multilateral institutions. That's not only true for the IMF, but I don't want to speak on behalf of other institutions, but certainly true for the IMF. Thank you very much.